Summit Real Estate Podcast. Today is February 27th, 2019. Today I'm sitting with founder and broker Evans Small. Hi, Evans.
Hey, Floyd. How you doing today?
Doing well, thank you. I understand that today we are going to talk about the home buying process.
Yeah, we discussed listing a home and how to prepare it and price it in the past, so I thought it'd be time to flip the table and see what a buyer has to go through in order to get a home in this market.
Can you give us an idea of what the preparation looks like for the home buying process?
Yeah, the first step any home buyer goes through is to assess the finances. Either they have the cash to buy a home, in which case they definitely know what price they want, or they have to qualify for a mortgage. And a lot of times you can't quite afford the house you want, or you can afford more than what you thought you could, so you can end up with a better home than you thought. But first of all, you have to have those finances in order, which means if you don't have the cash, you need to be pre-qualified by a lender who thoroughly examines your financial status so that they can write a true value for the home that you can afford.
And does someone get directed to a lender after working with an agent, or is that something they need to do in anticipation of working with an agent?
I would say about 70% of home buyers come in with a lender. Frequently, it's their bank. The larger banks, B of A. Now we're seeing more online loan approvals from online lenders. So they know how to look for a mortgage. Very few of them really need guidance on where to go.
And for the ones that are looking to make a cash purchase or self-finance, I guess just pay cash for the property, what does that look like for those buyers?
Well, for them, all they have to bring in is what's known as proof of funds, which is a balance sheet, some account that includes enough money to cover the total price plus closing costs.
So on a $400,000 house, it may be $420,000.
Yeah, that'd be a good range to be in. You have inspections, you have financing costs that are there, title, escrow.
And if a person's paying cash, do they have to have good credit?
No one looks at their credit. They do have to prove that those finances are liquid. So you can't say you have 5 properties and you'll sell one, and that'll be enough to pay for the house because it takes too long to market a home. So generally sellers want to close within 30 to 45 days, so that's not practical.
Can you walk us through the next steps now that we kind of have an understanding of the two types of methods of financing, whether it be cash or through a bank? What's next?
Well, next you sit down with a realtor and you try to determine an area where you want to buy a home. These days, a lot of people want the Summerlin area, of course, which makes their prices higher. But there are homes all across the valley in various price ranges, so you want to narrow their search. Some people are more worried about the schools their children will be going for. Some people want a senior-only community. Some people want to live on a golf course and hope the thing survives financially so that it doesn't go under, dry out, and they have apartments in the backyard instead of a golf course. So you sit down with the realtor. He assesses or she assesses what you're looking for, and then we go on the multiple listing service and choose a selection of homes to look at, just the pictures at first. And then that's a good time for the realtor to let people know that those pictures are not the house. So they can be either better or worse than the house. Many times I've had people say they don't want to go to a house because it looks lousy because the realtor has lousy pictures up. So you have to be careful to encourage your people to be open the first few days so that they don't limit what they're doing and maybe miss the house that would be ideal for them. Then once you've looked at the MLS and you've chosen a few houses, the realtor calls to make an appointment and you start going to look.
And I understand there's this term called comps or comparables. How does that factor into the equation? And can you tell us a little bit about that process?
Yeah, every buyer comes in with a price range. And some homes are just a little bit out of that price range, but they're interested in them. So you can quickly check as a realtor to see if that home is overpriced and whether it should be in their price range or not. So we look at recent sales to determine comparable value, which is where comps comes from, and that really comes into play when you're writing an offer. When the buyer has selected a house that they really want, we go ahead and we write an offer, but we only do it for an amount that's justified by recent sales. In the old days, the boom, which is all the way back to last year, we were writing offers 3 to 5% over list sometimes because the competition is so fierce. Those days are over. Right now we have a 4-month supply. Sales are down, so buyers have not only a better selection, but they can come in and ask for contribution to closing costs, come in a little under list price, and be realistic with their offers rather than have to compete against a fantasy value, as I call it.
Not to go backwards, but I'm really curious. Do cash buyers have any type of advantage in the writing an offer process?
Absolutely none, other than they're assured to close. The seller, when you think about it, is going to get cash. So it doesn't matter whether it comes from cash or from a bank loan. It doesn't matter to most sellers. But if a seller's in a hurry and has to close in 30 days, that cash offer moves way up in the rankings.
So it's not like typically a cash offer gets moved to the top of the chain.
No, not really, because you want to make sure, first of all, that the loan approval letter is strong, and the loan offer is usually above a cash offer. Cash people expect a discount because they're paying cash. They don't realize that their cash is the same that comes from a mortgage lender. Because they've been wise enough to save and are able to pay cash, they expect generally about a 5 to 7 to 10% discount, which in a hot market for sellers doesn't work. But as the market cools, those cash buyers start to look a little better at a discounted price.
Thank you for clarifying that. I was under the assumption that cash buyers maybe had some advantage, but all things equal, I mean, cash or bank, it's all greenbacks.
Yeah, and a lot of people were mistaken in the crash when lenders foreclosed. The homeowners that were foreclosed on were angry at the banks, thinking, well, they already got my money. No, they loaned you money. You didn't pay it back. So a lot of people were mistaken in how finances work, and it was very confusing to me.
Can you tell us a little bit about the accept, reject, counteroffer process from the seller's side?
Oh yeah, this is a lot of fun. The seller will receive an offer, and if it's way low, but they know they're priced too high, they'll counter somewhere in the middle. So say it's $10,000 below, they'll try to go halfway usually. And then that goes back to the buyer, and the buyer again can accept, reject, or counter himself, and sometimes you can have 3 or 4 counter offers before you arrive at the price for the sale.
That must be a lot of fun navigating all that.
Well, it just adds to the paperwork and the size of the file, but you can understand everybody's perspective. I mean, no one wants to overpay and no one wants to undersell.
The next step, I guess, would be delivering a contract.
Yeah, once we get the residential purchase agreement signed by all parties, all counteroffers are signed by all parties, we open escrow at a title company. And the escrow officer will ask for the contract, and then you also send one if there's a mortgage to the lender, because they have to see what they're going to be financing, and it's darn hard to do without some paperwork to look at. So they want to make sure the terms of the loan, the purchase agreement, are something that they can actually issue a loan for.
So the lender basically gives a dollar amount in the early approval process to the buyer. They say, you're good for, based on your application and credit and cash and all that, $300,000.
Exactly.
And then during this process we walked through to this point, the buyer would then go back to the lender and say, hey, Mr. Small, help me find one. We got it. I'm going to buy it. And at that point, the lender could say, just kidding. This house isn't worth that much. Or what does that look like? Does that get crunchy in there?
It can, especially in a hot market where the house won't appraise for the offer price. So once the appraisal comes in, again, you get to the renegotiation stage if it's under the amount of the sale. If it is, then the buyer obviously asks the seller to come down to the appraisal price. The seller goes, no, but I'll meet you halfway. Seller goes, no, I don't have any extra cash. I'll meet you 1/3 of the way. So it goes back and forth again, and sometimes you do lose a contract in the appraisal negotiations because neither party can agree.
Wow. Are the appraisers neutral, independent, third party? I could see where that could get really crazy if the appraiser was biased in some way.
In the boom days, they did have problems with appraisers who were owned by lenders who were not exactly ethical. So the appraiser would go out and give the price no matter what. These days, you are part of a pool, so the lender goes for a pool of appraisers. They can't pick their man or their woman to do the appraisal. They are assigned one by a pool. And that appraiser goes out, and it's there exactly for the reason you state, to ensure independence from any kind of influence from the buyer or seller.
Well, it's good to hear there's a little more, I don't know, regulation or controls around that.
There's a lot more. Lenders are much more disciplined in assessing creditworthiness and in verifying income and employment stability. So really the atmosphere is 170 degrees changed. We still do have a couple of lenders who are giving stated income loans, but I'm sure they're selling them as discounted, less than A quality loans.
The inspection process is next.
Oh, that's always my favorite. I just had one recently on one of my listings where the home inspector found a air conditioning filter that was not clean and reported that as something that had to be taken care of. And I thought, well, that is not a functional issue, and it was not dirty, it just wasn't brand new. But for $10.49, I'd be a fool not to run down there and shove a new one in there and agree to it. But they're generally looking in the home inspection for potential system failures, for water leaks, ACs that don't work, water damage in the ceilings that makes people suspicious of past leaks, and then you want to know that those are corrected. So the home inspector generally should spend about 1 hour and 45 minutes in a 2,000 square foot house testing every plug, looking everywhere, and they do a good job of finding things that could well cause problems. The most annoying is a roof tile that has slipped. They're easy to find, but it's hard to find someone that's going to go up there for $18 to push it back into place and make sure it's fixed. The 2000s were the era of shoving roof tiles up there and hoping the rain didn't wash them down. So that's frequently an issue that comes up.
Well, I know, Evans, that you have a lot of experience in real estate, and I would guess that when you're representing your buyers, you probably have a pretty good process in place for both yourself and your agents to serve as a second set of eyes on some of these inspections. Can you tell us a little bit about things that you might look for to warn your clients before?
Yeah, the very first thing you're looking for, while the clients are checking out the countertops, the flooring, and that sort of thing, my eye is wandering towards baseboards and ceilings to look for any evidence of water damage. Mold is expensive to remediate. I've found small mold stains in homes right behind a water heater which exploded in the past, and it might be 8 to 10 square feet. But it's $1,000 square foot to remediate, so all of a sudden you're looking at a $7,800 bill to take out a small amount of sheetrock. So you really want to make sure that as an agent you can see issues that might come up and you just point them out. Home inspector will look at that. If you want, we can get a mold test. They're only about $350. They used to be $1,000 for a mold test, but competition. More people went into it when they saw they could make $1,000. Now they can only make $350, but still you can get a good mold inspection for $350. You also want to look at the backyard. What's over the fence?
Hmm.
A lot of times, a lovely house will be over the fence will be an empty field. And it may be zoned for single family residential now, but I always encourage my people to think, what if there was a McDonald's and a gas station back there? Would you still want to do it?
Wow.
Because from the history of Las Vegas, we know that bags of cash under a lunchtime table can change zoning in any direction. So we've sent 2 or 3 commissioners to jail in the 2000s. So it's, humanity is what it is, and corruption can exist. I'm not saying it does today.
So in some instances, homeowners purchase houses under the understanding that that land was zoned for a particular use, and they find out 5 years later that a concrete yard's being built there, or something that's very obtrusive and.
Yeah, exactly. And also views. You might have a view today, and because there's an empty lot behind you, but whatever is built on that lot could very well destroy or impact that view. So a real estate agent should never guarantee a view. Right now, we've learned we can't guarantee a golf course will continue. So we're getting more cautious each and every year as we see issues come up in the real world.
Just hearing you talk about some of these things, Evans, it is so important to anyone listening in our audience that they hire a good, experienced realtor. There's just so many things to look out for and so many potential issues that could arise. I mean, you really do mitigate that stuff by having a guy like Evans on your team looking out for that stuff. And I understand that you also instill this similar thought process in your agents that work at Summit. Is that correct, Evans?
Oh, you have to. You have to explain why a contract needs to be filled out a certain way. I get some of the most horrific offers on my listings. The arithmetic doesn't add up. Deadlines are too short. They don't protect their customer. You have to give your customer time to get out of a transaction if something goes south. And if you're in a hurry to get your commission, then you're not protecting your client. And we've got a lot of commission-hungry agents out there because business has slowed down. We now have about 12 to 14,000 realtors here in the Las Vegas Valley, and we're doing about maybe 1,900 transactions this month. So that means only 1 in 4 agents is going to be getting one of those sides. So you have to make sure that your realtor is full-time, and ask how they're protecting your earnest money so that they might have a chance of getting it back if something comes up that they don't like about the house they're under contract to buy. I've got 5 ways I protect buyers, and I let them know in advance what they are and what the deadlines are for them to respond for those 5 ways.
So at this point, the financing is handled, the search for the home is handled, the offer's been made, paperwork has been written. The lender has approved the funding. What's next?
Well, you've also done your home inspection and the appraisal came in at value. So you're waiting for the lender to finish the loan documents, unless it's cash. Now, the loan documents are surprisingly tedious. You're going to be signing them for about 40 minutes. You got tons of paperwork. So the lender wants to make sure that they're sure that you're sure that you want to pay this loan. So they do a lot of employment verification, a lot of income verification. Last minute, the day you're signing, they are pulling your credit, looking for any blemishes. I've only had 1 escrow collapse because of that. The gentleman bought a car the week before he closed escrow. His debt-to-income ratio tanked,
Oh my goodness.
and he was unable. But the worst part was he didn't buy the car. He co-signed for his son.
Oh my goodness.
So you can't overemphasize the importance of not buying a thing. That refrigerator at Lowe's will be on sale at JCPenney after you close escrow. You don't have to purchase your flooring unless it's a new home. until you've closed escrow. You don't have to buy a new car until you've closed escrow.
So that shift in your credit report and the one case you mentioned, it precluded the person from actually closing. But in many instances, those little blemishes, for lack of better words, those little spikes on their credit report, those can affect their rate last minute too, right?
Generally, the rates don't get impacted too much. That's a lot rarer. But I've had job loss the day before signing. I've had new cars purchased the day before signing. Things can come up, and this is unfortunately after your loan approval period. We do put in a 25-day protection for our clients so that if their loan isn't approved within 25 days, we can get the earnest money back. But between 25 and closing, if they tank their own credit, they're not getting their earnest money back.
And on the topic of earnest money, is that the down payment? And if so, can you tell us a little bit, like, what is the formula? Maybe on a $300,000 house, how much is that?
It varies from realtor to realtor what they ask for their seller. Generally, it's 1% or 2% of the sale price. So on a $300,000 house, $3,000 to $6,000. That is an indication of commitment from the buyer that they want to move forward. That money is held in escrow. It's not turned over to the seller, held in escrow. And then you have 3 or 4 ways to get out and get your earnest money back. A due diligence period, a home inspection, appraisal, loan approval period. Those are 4 easy to think of. In which case, if any of those things happen and you want to back out, you're going to get your earnest money back. So it's not necessarily gone. But then it becomes part of your down payment when the loan closes.
Oh, wow. Oh, so it gets rolled into the percentage of required down.
What's called your closing costs. So it is part of that.
And is that where the realtor's commissions are also taken from? Or?
Generally, the realtor is paid by the selling end, the listing end. So the buyer does not have to pay the commission unless he or she has a separate buyer agreement with the brokerage that requires them to hit a certain percentage of sale price. A lot of brokerages want their agents to make 3% on every transaction, but the listing agent is only offering 2.5%. So the buyer might have to come in with that 0.5%. I won't allow my agents to write one of those agreements. You represent the buyer at the rate that the seller is willing to pay.
Well, that sounds really good. I mean, it's really fair. I mean, really, it seems like you've really thought about that.
Well, the buyer's already coming in with everything they can possibly. I mean, they're a lot of them are searching couch cushions, car seats, under the carpet, everything they can, because this is a lot of money to come up with to close. So add a burden for broker greed is not appropriate in my mind.
That's well said. Thank you so much, Evans. We all now have a better understanding of the buying process. Are there any areas of these, roughly in our sheet here we're looking at, we have about 18 points. Are there any of these items that are variables or that could change in the next year with recent legislation or things that are going on in California? Do you have any insight into that?
No, this is just a standard process that you go through with each client on each home purchase. So legislation will not impact that unless they come up and say that we're not allowed to represent you for some reason. But these are pretty much standard practices that have been honed over the years.
Well, thank you so much for your time today and walking us through this.
I appreciate it, Floyd, and we're always happy at Summit Properties to represent buyers and sellers.